Hey guys, it's Sasha. It is becoming very apparent that you should probably not be investing money in 2022. In this video, I will tell you exactly why you shouldn't be investing money this year, and in case you haven't watched my channel before, I suggest that you watch more than the first few seconds to understand what it is that I am saying before you head to the comment section to do your worst. Now, yesterday, Russia invaded Ukraine and the markets didn't know how to react. The Russian stock market got completely obliterated. US and European countries have introduced a number of sanctions, and the stock market in the US went from minus 3% market trading to end the day in the green by 1.5%. And the growth stocks that have been completely decimated in recent weeks decided to go and collect big gains on the day that thousands of tanks drove across the border. All of my big positions ended the day with massive gains, with Fiverr and Palantir going up 13% each on the day, which is ridiculous, and naturally investors were very confused. What the actual hell is going on here? Should you be selling stocks because of what's happening? Should you be buying stocks when an unprecedented war breaks out? If you decide that you want to buy US stocks, many of which are at the moment less than half the price they were before the big sell-off started, the cheapest platform in the UK to do it is Lightyear, who are the sponsors of today's video. Lightyear is the only free investing platform in the UK for investing in US stocks. Lightyear does not charge any foreign exchange fees for converting up to £3,000 per month, and the best bit is you can keep your money in US dollars after you've converted it the first time. So even if you then sell out of a position later on in the future and reinvest more than £3,000, it'll still cost you nothing to do it. So if you want to pay fees to invest your money, feel free to go and use any other investing app that you like. But if you don't want to pay fees, use my link for Lightyear in the description and you'll get a $10 bonus just for signing up and making an initial deposit of £1 or more. All right, so let's talk about investing in 2022, or more like not investing in 2022, because I have seen a very big shift in people's mindsets in the last few weeks that make it incredibly patently clear that a lot of people should not be investing this year. We are seeing a difficult overlap of US inflation and interest rate issues with the war in Ukraine, which means that stock prices have taken a massive hit. And the problem is that for many retail investors today, probably many of you watching, this is the first time you have seen a real market downturn, because there has been a massive surge of retail investors starting out for the very first time in the last 2 years with the advent of free investing apps like Lightyear, and the stock market went absolutely bananas. It didn't matter what it is that you invested your money in, everything went up and everyone was doing extremely well. Everyone was an investing genius. The stock market had one of its biggest bull runs in history, and then something changed. First, growth stocks began declining in 2021. Then growth stocks began really getting hit, all completely smashed to pieces from November 2021. And then the whole stock market went through a correction in January 2022. And the S&P 500 is now 10.6% lower than its closing price on the 3rd of January. And because investors happen to be human, well, most of them, the natural path of emotions begins affecting how people think about their investments. Investors are angry because the stock that they invested in 4 months ago has lost 60% of its value. I know a lot of people are angry because they come and leave hundreds of comments on my channel every single day that say, "Oh my god, your stocks are 50% down, enjoy holding your bags, you suck in investing, bye." And a lot of them point me in the direction of some other YouTubers who advocate selling everything because they know for sure there will be a market crash, even though they predict the exactly opposite reason. And here is the important message that you need to hear. If you are genuinely panicking about your stocks being 50% down, then you should not be investing in 2022. You probably should not be investing full stop ever, because investing is not something that just prints you free money every quarter. Investing has risks. Investing also has downturns. Markets will crash. Your stocks will lose value. Sometimes you might have to wait several years if your stocks recover, and that is a big if. Not every stock you choose will do well. In fact, a lot of them will not do well, and you are going to lose a lot of money. Sometimes the world decides to conspire against you by throwing inflation and wars all at the same time, things that we haven't seen in many decades. It could get worse. Inflation could be double what it is today at 7.5%. The war could get a whole lot more ugly. It's only day 2, and who knows where this is going. The world could be a lot less hospitable to business if we enter some kind of new Cold War. If these things trigger you, That is okay. It is natural to be triggered and feel anxious when serious catastrophic events happen. But if this feeling makes you then angry about your investing decisions retrospectively, then you probably should not be in the stock market at all, because the stock market is volatile. For every good year, there is a bad year. And however bad it's been so far, it's not even that bad yet. We're only 10% down overall. If you cannot distinguish between a change in the fundamentals of a business that you are investing in and macroeconomic exogenous factors, then you should not be investing. Because investing is about numbers, it is about assessing risk, it is about understanding the long-term implications of short-term movements. And sometimes the macro does affect company fundamentals, so these things are related. I wouldn't be investing in a Russian bank in a hurry at the moment given the recent spate of worldwide sanctions against them, for example. But as an investor, you have to have mettle and you have to have resolve. It is part of the job description. If the stock of a company that you are investing in is 50% down and literally nothing about your thesis or valuation has changed, that is a good thing. It means that any investments you are making into that company now have a higher expected return. If your expectation on the future revenues and profits is the same, if your assessment of the risk profile of the company is the same, or at least pretty close to being the same, then why exactly are you upset? Just think about it. Do you cry in the shop every time you see a chocolate bar on discount because you remember all the times in the past when you bought that chocolate bar at full price? Do you get upset if you are paid a bonus at work because you remember some of the previous years when you didn't get one? If you are upset by stock price movements and it makes you agitated, then the answer may well be that you should not invest in the stock market. If you make your investing decisions by listening to somebody on YouTube shilling the latest dog turd token or a monkey NFT, then you definitely should reconsider your investing philosophy. If you don't have the time to do research, analysis, and put the time in to understand what you're investing in, then do not invest. Or just go and invest in the S&P 500 index or the total stock market index or whatever similar thing you like. The simple fact is, investing is not right for a lot of people. And active investing, the sort of investing where you pick your stocks, is definitely not the right thing for most people, and most people should not do it. Because if you do it and you don't actually spend the time, you don't do it right, you can lose a lot of money. Investing isn't a fun game where you go and open your app to check your score every day. It is a long-term way to build wealth that requires thick skin. And this year could get better. Maybe we're going to have a magic diplomatic solution to the war, or it'll end quickly with minimal bloodshed. Let's hope. Maybe inflation is going to decide to go away all by itself like so many people were telling you it definitely will through last year. But then again, things could also get a whole lot worse, where the 10% drop we've seen so far in the stock market is just going to be the start. The fact is, I don't know, we don't know, nobody knows. And the stock market has a habit of reacting to things in a way that you might not expect, like what happened yesterday. So we have uncertainty multiplied by uncertainty, and there you are trying to predict what the short-term movements in the market will do. If you can't take a sucker punch to the gut with your investments, do not invest in the stock market. If you might need the money soon for a major purchase like your house or to retire, and you can't afford to lose the money, do not invest in the stock market. If you measure investing outcomes in days or months, don't invest in the stock market, because on that scale, you're just gambling. If you don't feel you have the mettle and resolve to invest for the long term and ignore short-term noise, do not invest in the stock market, because you will lose the first time the stock market decides to go and punch you in the face. And unfortunately, the majority of people are probably in one of those categories. And that probably means that the majority should not invest in the stock market. If you found this video useful, please don't forget to smash the like button for the YouTube algorithm. Thank you so much for watching. I really appreciate it. And as always, I'll see you guys later.